Well, we think it's pretty clear they're going to cut interest rates this afternoon. I think what's also pretty clear, though, is that the Federal Reserve under Powell currently is also going to signal that this is the last interest rate cut, I think at least for a little while under Powell's term, unless you see the labor market risks that folks have been focused on and talking about, unless you see that really realized. I think they're going to come out and say the bar for additional cuts here is pretty high.
What do you think is the date? We're going to get a lot of data between now and the January meeting and certainly the March meeting, a lot of backdated data. What's most important to you, or what do you think is most important to the Fed?
Yeah, I mean, I think the data has been incredibly interesting, and we think it's going to stay that way. And I say that because on the one hand, you've seen various labor market indicators, private sector labor market indicators that have shown a continued weakening of labor market activity. And we think it's very possible that private sector added no jobs on net over October and November, and the unemployment rate could very well tick up again. But against that, the holiday shopping trends that we've seen, at least the early indications of that from the data that we get over the Thanksgiving holiday, as well as other private sector sources like credit card data, suggest that consumption has held up incredibly well in the second half of this year. So, and I think that is going to weigh on the Fed. You also have the fact that we'll get more fiscal easing. So the One Big Beautiful Bill Act that was passed last year included some pretty large household tax cuts that were retroactive. So consumers should expect a pretty big tax refund season coming up. So, it's certainly possible that, the growth being strong, resilient, coming into that fiscal easing, could get a further boost.
Can I go philosophical?
Oh, yeah.
I mean, it's a Fed day, folks. Usually we aren't philosophical, but we can do this with Tiffany Wilding. Tiffany, this is not the first time we've had a K-shaped economy, which is media baloney for the haves are kicking it and everybody else is flat on their back. Why are we transfixed by a K-shaped economy with this Fed versus various Greenspan, Arthur Burns, or McChesney Martin Feds?
Well, I think one thing is, that's clear about monetary policy is they have very blunt tools to manage the economy. And so they're managing to the average where you have, a pretty decent distribution under that average, right? So the growth that we've seen this year has been indeed more resilient. We would argue that the real impulse to that resilience has been the AI story. You've seen it accelerate investment, but it's also resulted in wealth generation that has helped to keep consumption elevated. And certainly for those higher income households that have a lot of equities, that helps them as well. So, as a result of that strength there, you are seeing weakness in other areas. So AI is probably keeping rates higher than they otherwise would be. That's making housing less affordable. That's making other investments more difficult. So the Federal Reserve, it's very difficult for them to manage. They have to manage to the average. But underlying that, you are seeing some weakness. There are losers from the policies that have come out this year from the Trump administration. Smaller, mid-sized businesses, for example, those that are capital intensive. But I think the question is, how, can we get an economy that is more reliant, at least in the near term, on these, the higher end K, the upper K piece. And the other thing is that when we do get tax cuts coming next year, that will help broaden out growth somewhat, we think.
Do you expect today from the Fed that we'll get any meaningful changes as it relates to economic projections?
Well, so we think there's a very good chance that the 2026 median interest rate projection will move up. So last September, it was projecting still one cut in 2026. But we think that could move up to basically flat. And our read of the various folks when they come out and publicly speak is actually there's a lot of questioning around if we actually do need this additional cut in December. So I think one of the ways or one of the things that Powell could do in order to get consensus is say, okay, we're going to get this cut, but then that's basically moving it forward from what you were projecting in 2026. Let's move it forward, and then you think we are on hold after.